So before we get too much further into this month, because we're like mid-April right now, wanted to address mortgage forbearance because a lot of people watching this will have mortgages and probably would have heard by now that you may be able to get some kind of forbearance on that. And what does forbearance mean? It doesn't mean that a payment is going to be forgiven. It essentially means that the bank will accept the payment at a later time. But the particulars of that are key. The CARES Act that was passed at the end of March does provide that federally backed mortgages, meaning a mortgage that was purchased by the FHA, by Fannie Mae, by Freddie Mac, if you reach out to them and you can show a financial hardship, they are supposed to forbear, meaning they're supposed to allow you to not make your payments for a period of time. Could be up to 180 days. I've actually heard in some cases maybe more. So that much is clear. What's not clear, and what I think most banks are trying to get guidance on, most borrowers are trying to get guidance on, is what are the terms for repayment? Because the money is not going to be forgiven. It'll have to be repaid at a later time. So what have we heard? In most cases, we've heard either it's due as a balloon payment at the end of the forbearance period. Let's say 90 days, you go without making a payment. On the 120th day or in the fourth month, you may have a balloon payment that's going to be your current payment plus the three that you didn't make. And I think for most borrowers, it's going to be too much, and you may find yourself in more trouble, and you may have further defaults. You may have to renegotiate. These are big entities that we're talking about. In most cases, you're talking to a servicer who has to go back to investors or to Fannie and Freddie. And it's a lot easier to get it right the first time. So if you can't afford to make your payment, you should reach out to your servicer. You'll be able to find them on your last mortgage statement, whether you get it online or in the mail. You should ask first, is it a federally backed loan? I think Fannie and Freddie on their websites will allow you to look up your address, or if you have a loan number, they'll confirm whether it's one of the loans in their portfolio. But that's question one, is this a federally backed or owned loan, so that you know you're getting forbearance? If the answer is no, does the lender or the owner of your loan, do they have any forbearance options available? And then it's absolutely key that you find out before you do anything, or before you go late, find out what the terms are for repayment. The best thing you can hope for, but I have not heard of anybody getting this yet, is they'll add it to the end of the loan. So if you have a 30-year mortgage and you're about 5 years in, if you can skip however many months of payments now and add it to the end of your loan term, that's fantastic. Because in most cases, very few people actually make it to the end of a 30-year mortgage. Usually you refinance or you sell and the mortgage gets paid off. So it does affect your equity because you're not making those payments and building your equity for a little while, but it's going to have a minimal impact, and that is, in my opinion, the home run. If you can get the forbearance period or the lump sum spread out over 12 months or preferably more, you just have to do the math. Figure out what's the most amount of time they're willing to give you. How long can you spread those payments out, or how far back into the loan term can you push them out? And then another important question, after you've done the math or you've made sure that the repayment terms are going to be affordable and that you're not inviting trouble down the road, if you are already behind, and when I say behind, I mean 60 to 90 days on one or multiple payments where the bank is already reporting you as late to the credit agencies, find out if you need to bring those past due amounts current in order to stop them from continuing to report you late. If you don't ask that question and you find out, several months from now, or even longer, that they've been reporting those as late this whole time, it's just going to continue to negatively impact your credit score. And that's not something that we want people unknowingly getting into. Happy to answer questions about this, but most of the answers you're going to be seeking, you will find by reaching out to the servicer and just asking these questions. Make sure the math works before you agree to anything. And I can't say this strongly enough. don't simply not pay. You should definitely reach out and be proactive. Make sure that you're going to qualify, because it's not a given that you can just skip a few months' payments. All right. We hope everybody's staying healthy and well. Hopefully, we'll be back to a more professional way of interacting soon enough. But for now, hopefully, this was helpful to you. Take care.